Hey, Celsius Critters. We are live on YouTube and we're also on the Twitter space, but I'm going to be going through a bunch of slides. And today I'm going to attempt to make tax interesting. So I'm not a tax advisor, as we all know, but I have been through a bunch of stuff with many of my advisors. And I'm going to share with you a few things today. So this is a continuation. It's a 4-part video series. And last Friday, I shared with you my exact strategy for what I'm going to be following in order to attempt to recover the Bitcoin that was rugged from me as a result of using Celsius. And I'd love everybody to define their strategy, have a strategy, so that they can really just go in with it, so that they know what they're going to do after this. Now, mine was based upon my high risk profile. This was risk capital for me. But I also shared how I would think about this if it wasn't risk capital. And that really just involves locking in the loss and putting it in Bitcoin. And obviously that depends on whether this was your retirement money and this was stable coins, and you saw it very much as an alternative to a bank, how it was represented, or whether this was like your crypto risk money. So that decision you have to decide for yourself. But I shared with you my approach, given that this is risk capital for me, and that this was a small percentage because I was risk managing the amount that I put into Celsius, because, that's how I was thinking about it, and looking at it from the perspective of experimenting with borrowing against my Bitcoin rather than selling it and seeing how much I needed to cover the interest on that loan. Right. So today we're going to be going through timing, tax, and litigation. Now, the funny thing about that is I'm not a lawyer, I'm not a tax advisor, I'm not a financial or investment advisor. However, I'll be sharing with you what I'll be doing based upon the conversations that I've had. So this is going to be a lot easier for you if you're over on YouTube where you can see the slide. One final thing before we jump into the content. Head over to simondixon.com/recovery at some point. You don't need to do that now. And enter your details, because we're going to be sending out emails next week with the login to the portal where you can see all these videos, you can download transcribes, you can get the slides if you want to look a bit more deeper into it, and you can engage with other community members under each video if you've got more targeted questions that you'd like to ask other community members. It's completely free, so we can't really deliver much support in that, but other community members can. So make sure that you're on the list so that we can send you your free login details next week. The team have worked on putting together that portal. Okay, so let's jump straight into the content. First thing I'm going to be doing is sharing my screen. So give me a second and we'll make sure that we've got the slides up. Okay. Full screen. Okay, awesome. So if everything's working, Azad will let me know if not, but you should be able to see the Celsius recovery solution. And there's the URL that I talked about a second ago, simondixon.com/recovery, where you can register. And then next week, we'll be emailing you with all your login details for those that need to go deeper into these topics. Okay. Right. So as a quick recap, what did I cover yet last week? So today we're doing part 2, which is all about timing, tax, and litigation. 3 very important parts. And I'll go through those and we'll do an AMA afterwards on Twitter. Try to keep it relevant on the Twitter space to the subject we're discussing, so that everybody, because I'm doing this in a very logical format, as you'll see. Okay, so I got to put the disclaimers up on screen. I'm not a lawyer, but I've spoken to a lot of lawyers. I'm not a financial advisor. I have done my qualifications in financial advisory, but I don't know squat about your situation. And financial advice and legal advice and tax advice is always bespoke to your particular situation. However, for educational purposes, I can share with you so that you can go and speak to your advisors, and you can decide with this information and try and progress this. In video 1, I'll just give you a quick summary of what I covered in case you missed it. I do suggest you go back. The devil is in the detail in your recovery. The more you put into this process, the more you're able to recover. If this was a very small part of your wealth, then you don't need to put much into it. But if this was a significant part of your wealth, then I really suggest you treat this seriously, in order to recover your funds. The more you put in, the more you'll get out. I'll try and do a lot of the work for you, but you've also got to do the work as well. So what I said is that think about the last year and a half of Chapter 11. By the time we get out, is probably a $350 million cleanup exercise. What we did is we took all of the criminality out of Celsius, settled with the FTC, the SEC, the CFTC, and the Department of Justice, whereby creditors could get the assets that were from all the fraud back to creditors, and the criminality is left with the perpetrators that committed the crime. So that was a $350 million cleanup process to have a company that can potentially list on NASDAQ, be public, and have every single part of it scrutinized by everybody that wants to litigate. And we end up with resolution to all those things so that we can have potentially one of the cleanest companies listed with public reporting requirements, and a chunk of our crypto back, even though we're not getting the original asset we wanted, because we were probably happy with that. Obviously, half of those funds are gone. Okay, so we're reframing it to a $350 million cleanup. And that was part of going through that in video 1. And here's a quick summary of my strategy. Again, I don't know what's right for you. This is just what I'm doing. And you can decide how you think about it. So the very first thing I'll be doing is when we get our distribution, I will set my Bitcoin goal. I forget about dollars. Dollars means nothing to me. I don't think in dollars. I think in Bitcoin. The only thing I do in dollars is spending in fiat currency. But when it comes to savings, investments, that's all done in Bitcoin for me. So I set my Bitcoin goal. Now, I'm probably going to have about 75% less Bitcoin than what I originally had, depending on where the chips fall and whether the price goes up or down, and how much we have to give to NewCo in order to capitalize it in exchange for the equity. So I'll set my Bitcoin goal. Once I know that, which we will know by November time, probably October or November. Then step 2 is that I am going to maximize the sunk costs. So if we don't get a NewCo and we just simply get a distribution or a Chapter 7, then we've wasted the $350 million. It was like a cost without having a clean company that could be listed on NASDAQ at the end. And also, we would essentially, in a Chapter 7, be selling our ASICs that Maszynski purchased, the 120,000, for about 88 million, rather than having a company worth 540 million. Whether you believe in that valuation or not, that is the valuation that we'll be going in with. And so that is approximately $800 million in sunk costs that we need to try and recapitalize through NewCo. And if we ended up in a Chapter 7, then all of that would be sunk costs. And so we need to try and recoup. Then I'm going to be splitting my strategy into what you do in a traditional fund. So if you go and speak to any traditional financial advisor, they'll say to you, you need a percentage in growth and a percentage in income. And if you're closer and closer to retirement, you want more and more in income and low risk, but you want less and less in stocks and growth. And so I'll be using that to apply to this recovery plan. This recovery plan will be split into 2 approximately, but I will be deciding which direction I go, the toggle, let's call it, based upon the additional documents that are going to come. And so my ETH staking is going to be my income strategy. So I'll be generating yields. It's higher risk than Bitcoin. And so therefore, in order to outperform Bitcoin, you need to go higher risk than Bitcoin. And I'll be looking to hopefully outperform Bitcoin. But if we enter into bear markets, underperform. If we enter into bull markets, historically overperform, but also receive the staking yield in order to try and recoup some of that Bitcoin hole over time. And then I'll have growth, which is NewCo. And I presented some slides around the multiples that equity has historically performed in the Bitcoin mining sector, based upon ETFs, blockchain, and all that type of stuff. Go back to video 1 if you want the analytics. So I'll be splitting into income and growth. Growth will be shares, income will be staking. And then also I'll be converting all my litigation into ETH staking as well. So as it comes in, I'll get dollars in, I'm presuming, from litigation proceeds if they're successful. And then I'll be converting those to ETH staking to fill some of the Bitcoin hole, denominated in Bitcoin, and Bitcoin will be my alpha. Finally, I'll essentially rebalance my portfolio at the right time into Bitcoin once I feel like I filled that hole, or maybe I'll never fill that hole because it's a higher risk strategy. And the first rule of the market, the higher the risk, the higher the return, the lower the risk, the lower the return. If, however, you want to lock in that hole, then you take your full crypto distribution and you lock in probably a 50 to 40% loss after maybe you've sold some of the stock, but it's a lower risk strategy. So you have to figure out where on the spectrum of risk you sit in determining your strategy. So that was video one summary. As I said, I highly recommend you go back to the video. The devil's in the detail. Okay, so part two today, let's get started. Essentially, let's start with timing. So what I want to share with you is the key timeline and time frame, which really sets the tax strategy as well. So in terms of timing, let's look at this. What are the key deadlines that we need to be aware of? Well, firstly, today is the 8th of September. I haven't looked at the court dockets in the last couple of hours, but at some stage today, we're meant to get the plan supplement. The plan supplement fills in all the missing details. The most important details, who's on the board, because the board is going to determine, whether we get that recovery or not based upon how they direct the managers. So who are the managers? Well, we've got a Bitcoin management company. We've got a staking management company. We've got a venture capital management company, and they're all going to be pitching the board for opportunities. And the board is going to be the ones that manage the risk and also disclose with public reporting requirements. And then those are going to go through, the quarterly reports that all public companies need to file publicly. And based upon missing those reports ahead of goals or behind goals is going to determine whether it outperforms Bitcoin, whether we get that multiple, and a multitude of other factors like Bitcoin halving, Bitcoin price. Interestingly, there has been new tax accounting approaches by GAAP, which is the accounting practice in the US, to catch up with international financial reporting, IFRS standards. In IFRS, we're allowed to mark the value of our Bitcoin if you hold it within a company on your accounts. Now, historically, a company like MicroStrategy has only been able to mark the value and mark it down when crypto goes down, but they can't mark it up when crypto goes up because of GAAP accounting rules. Those are set to change in 2025. So this is why I'm thinking about this in terms of a 2-year strategy. You've got the halving cycle, you've got the reports, you've got a potential board or management change after year one, depending on those decisions. And then you've got the GAAP accounting changes and the ETFs. That's a 2-year cycle where I'll be determining what I'm going to be doing with my equity. So the plan supplement comes out on the 8th of September today. And once I've got those details, I'll be analyzing those details and then sharing how I'll be voting next week. Also on the 22nd is where I'm going to take the voting right to the final stage, because there may be something in those supplements where the ad hoc groups are needed in order to have the final push before the confirmation hearing. And so I want to see everything play out with the loans ad hoc, the earn ad hoc, the consultation agreements that happen along those lines, the deadline, what comes out on the supplement, any more solicitations that we're going to receive. I don't think we've seen that many solicitations. And then I'll be making the final voting strategy, and I'll share that all with you throughout this Celsius recovery, recovery strategy approach. I'll share that with you. Okay, so then what happens? Well, then voting is over on the 22nd of October. Then we move over to confirmation hearings. So the confirmation hearing starts on the 2nd of October. And if you look at the schedule, there is schedules all the way up until approximately 23rd, 26th of October. So potentially that whole confirmation hearing might go on for the whole of October. It could finish earlier. It could finish later. It's got to resolve the outstanding issues and then decide what issues are going to be settled post the confirmation hearing. And so we have that confirmation hearing. There was a bunch this week, a bunch of Celsius releasing their whole documentation and reasons for valuing Cell at 25 cents, why they think it's worth zero, but why they want to settle at 25. Then the UCC also gave their documents, and the lawyer White and Case for the UCC also revealed additional Slack and WhatsApp chats to show that Cell token was manipulated pre-petition. And their understanding, and Chris Ferraro, the CEO, also released their declaration on under oath, so that can really, have everyone on the same page. They shared why they think that EARN won't be subordinated because the debt behind EARN is more like a debt instrument, but Cell was more, it doesn't have a debt associated with it, and it's more like an equity instrument. And so therefore why those securities are different. I always said, don't worry about those people trying to share with you that EARN is going to be subordinated. Never going to happen, was never a concern, but people were trying to scare you in that direction. We also have equity, the whole loan side. Some people in loans are going to try and jump the queue, and certain creditors in the court hearing tried to jump the queue as well. And I think that will just go through why they think they should be treated equally, and what that actually means in the different classes. This will have to be resolved. And then there's also equitable subordination, which is the insiders like Maszynski and Newt Goldstein. They want their fair share of our Bitcoin, ETH, and shares, and they want to be treated equally. And also they want to, Maszynski will want to try and get things in his favor for the criminal case. And so we have to work through that. I don't think Maszynski will turn up in court, but I do think the counsel for Nuke may turn up in order to try and get what they believe their fair share of our funds. So that would be fun. That happens between the 2nd and the 26th of October. And then there is a process of a lot of claims and settlements being pushed afterwards. So what happens with those? Well, anything that's unresolved will result in setbacks and money being held back that they can't distribute to us. And so if anyone, for example, in their plan, and I'll go through this more next week when we do voting, wants to, for example, wait and opt out of the class claim so you don't sue the Celsius and settle with Celsius, and you want to vote no for the plan, for example, if you don't agree with 25 cents for Cell, then you vote no, you opt out, you pursue the litigation, and your funds are held back until that's resolved, and they have to hold back those funds. And so in the case of Voyager, for example, FTX wanted to pursue it. They had to hold back 450 million. But those that don't want to do that means that there'll be less set back. Okay. So then what will happen is essentially you need to calculate your position based upon the crypto. And I'll go through a bit more of this in the tax side. You will have either a gain or a loss that will potentially be locked in as a taxable event based upon a number of uncertainties. And I'll share a little bit more about that. But essentially, I have positioned myself where I pay, for example, in my country, you can pay an annual tax cap, which allows you to realize gains, and you just pay a fixed fee every single year. Now, very few are in that position, but in certain countries, there's certain different treatments. But this is where you will be locking in a loss or a gain, depending on whether this was held as you as an individual, your company, whether you're in the US, your jurisdiction out of the US, or whether it was done through some kind of retirement plan, tax deferred structure. But personally, us and some of our clients at Bank to the Future, they have retirement plan structures set up where they could hold something like this through their portfolio builder. And some of them will be determining whether they want to hold it as an individual or transfer it to their asset protection structure for tax deferral. Now, that is a more complicated structure. Historically and typically, it's only really an option if you're like in the high net worth category, but you would need to get your position known, and that date will be set based upon when you receive your initial distribution. Now, when I go through the tax approaches, I'll share with you the important dates that you will need to know, understand in calculating your tax situation. And so the next thing is we will have a confirmation order. So I expect that to happen at some point in October or November. And a confirmation order means that the judge signs off on the plan, we move forward, and it moves forward to execution and distribution. So the confirmation order in approximately October or November is the next thing we're looking out for after the confirmation hearing. Then after that, we get distribution 1. Now, distribution 1 will be subject to the amount of crypto that they're going to distribute. So we'll have a plan effective date, and then we will need to fund, if it goes through NewCo, 450 million, which will be more Bitcoin or less Bitcoin based upon the plan effective date. The convenience class, they're 70%. That will be more Bitcoin or less Bitcoin based upon the date. And then the litigation administrator and all those various administration costs in the final part of the $350 million cleanup. After that, we get distribution 1. And distribution 1 will be the amount of Bitcoin and ETH that is left after delivering all the custody, delivering the convenience class, delivering any of the other parts, withhold, and various other stuff, minus how much is set back. So this is why Celsius is offering a 105% recovery claim increase for those that opt in to the settlement. And I know this is complicated, but I'll cover more step by step when I go through my voting and my litigation in the next few slides as well. And so I will be, that will be money that I'll take that crypto and I'll be converting it all to ETH staking. And so there'll be a benefit if I can get it as ETH in the account in the right place at the right time. And so I got to get the timing right there, because remember, when we transferred our assets to Celsius, they consider it, unless you're in custody, as property of Celsius. And so the trading can happen within Celsius, but we want to receive something, and what we receive back will have different consequences when we go through the tax side. Then you have distribution 2. Distribution 2, I expect to take longer. Now, Fahrenheit and the UCC have been giving us indication that this will happen around plan effective, around about October or November. I'm very skeptical about that deadline. I think it's more likely to be at some point next year. Now, remember, the timing of it happening and the distribution coming in, whether it's when it is received to the transfer agent versus whether it is received to your brokerage account, you'll need to get an opinion on that as well, because that will affect it. If that happens in where, for example, if you're based in a country, like when I was, not tax advice, but when I was based in Hong Kong, it was year end that mattered, and it was what happened in January. So you have, if the distribution happens before or after January, it will affect what eventually happens with your tax approach and tax strategy. Again, not tax advice. I'll put the disclaimers in there. This is just things that I'm sharing from all the conversations that I've had as well. And so when you receive that stock will become important. You'll need to know the valuation of the stock. You'll need to know the valuation of the crypto. And when you're assuming whether you're doing a loss or a gain, depending on when you originally bought that crypto. Okay. I expect that to happen around about February. Now, for example, if you're in the UK, it's April that matters. And so you need to, whether you receive it before or after April, will have an impact on what eventually happens. So this is why timing becomes important. There's things we can't control. There's things we can control, but you just need to be ready and prepared with your strategy, because it will impact your eventual situation. Then we move to distribution 3 and 4 and 5 and onwards, which is when, if the setback stuff resolve itself and litigation start to resolve itself, then we will likely receive either a Bitcoin or ETH distribution, or a dollar distribution. So you need to be ready to receive that dollars, but I want it in an account where I can, for example, go very easily from my stocks to ETH staking, or I can go from my crypto to ETH staking, or I can go from my dollars to ETH staking. So I want that all in one account personally. And that's the mission that I set Bank to the Future, so that I could go from public equity to ETH staking, all within my structure, whether it be an asset protection structure, or whether it be me as an individual, depending on how I set this up. And they all have consequences as well. And so those are really the timing points that matter. This is what you'll need to do in preparation to understand your situation. Right. So that's timing. Let's move to the second part. All of that lays the foundation of, once you know all that, setting your tax strategy. Now, the tax side, I want to, again, be very, very clear. This is not tax advice because it's 100% unique to you. There is no way that I could know what's right for you unless, firstly, I understand your situation, get all the declarations on that, and I'm actually a qualified tax advisor that can take on the liability and responsibility of that. So this can only be for educational purposes, but here are the tax assumptions that our clients at Bank to the Future that happen to have Celsius claims as well, and myself will be making in determining how they're going to navigate this. Here's assumption one. The assumption is that the authorities will already have this data. So I am assuming that all the tax authorities will come to Celsius just like they already do with Coinbase, just like they already do with Kraken, just like they already do with other companies, and the authorities will have this data. And so based upon that assumption, people have got two things to do. Now, many people, because of the uncertainty of crypto, they may be completely law-abiding people, but because of the uncertainty and they just didn't know what to do, the reason is because I've already spoken to multiple tax advisors in Australia, in UK, and US. I've read everything that was in Celsius's disclosure. There was about 16 pages, and I suggest you read that. And I've also done a bunch of work from when we set up our portfolio builder service, around holding crypto in a tax deferral structure. And some of you might have Roth IRAs and all that type of stuff. So there is an immense amount of complexity here. Plus, there is the crypto complexity, plus the in-kind distribution, plus the complexity of what the event was when you deposited to Celsius, given that Celsius ended up owning the crypto, whether you were in custody, and there's going to have to actually be legislative changes in the middle of this process. And so I am making the assumption that you most likely want to make some assumptions, clean up the past, and I'm hoping that tax authorities are going to recognize that the cleaning exercise is because of all the uncertainty and the uniqueness of this situation. There is precedents being set, and many tax authorities won't know how they're going to treat this until most likely 2025. I know lobby groups that are actually taking the Celsius situation to various tax authorities and asking them for an opinion on this. And we've already got groups of people within our investor base they're going to be grouping together in order to pull together one tax opinion with a top firm that normally only a high net worth investor could rely upon, and then creating the software so that you can import all your transactions from Celsius, some of the data from Bank to the Future, and be able to have a clear representation. And then you have to make some assumptions. And then you just need to prepare yourself because you have a high risk aggressive approach and a low risk less aggressive approach, and make sure that you can cover that. And so unfortunately, the complexity of this is immense. And that is the opinion. And I've spoken to people that know what the frick they're doing in this area. So you would be forgiven for getting this wrong, hopefully, not legal advice, but you need to clean the past, assuming that this data is known and based upon your net worth and how you're going to be moving forward, and then prepare for the future. And preparing for the future is efficiently allocating what you do in the future under various tax deferral structures so that you can compound and not have tax be a massive factor in whether you get ahead. And so there is complexity in all of that. I wish I could give you simple answers, but I think over the next couple of years leading up to 2025 even, there's going to actually be legislative changes based upon the regulatory changes that are going to work their way down to tax authorities. So I'm sorry I can't give you a simple answer. I tried. But let me share with you what I learned from reading. So tax timing matters in a sense. So here's a few things. The timing, depending on whatever your jurisdiction, is all about understanding the transactions and then being able to give your tax advisor or pulled together with lots of other people the types of transactions, and then they can make opinions. And there's more aggressive approaches and less aggressive approaches for those that want to be conservative based upon the risk of the situation. So you will need to know, and this is tricky, this is why we created a portfolio builder service, because when you do it within a company, it's different than if you do it as an individual. But as an individual, they don't treat it as fungible. And so you need to know your entry points with the crypto. That's one data point you're going to need to know. Now, imagine if you're initially, because you have, first in, last out, various other things, based upon which crypto you say went over to Celsius, because, it's not fungible. You may have earned interest, you may have shaded cryptocurrency, you may have earned income through Celsius, you may have changed format, you may have staked it. That's a bunch of complexity in between that will need to be understood. That's going to need to be figured out in the cleaning exercise. Then it's whether a deposit to Celsius is considered a transfer of ownership. So in, for example, the US tax opinion, they state that, they call it a tax ownership transfer. We'll go through that in the US tax opinion. But I strongly suggest you read the section in the disclosure statement if you're from the US. And if you're not from the US, then we need to work through these different transactions because it doesn't give various guidance, but it will give you a few thoughts on how to treat this. So it depends upon your deposit to Celsius. That will be whether it was a security or not a security. You get where this is going. So, for example, we may have a determination in the confirmation hearing whether this is a security or not. Likely we won't. Celsius has given their opinion. They think that both EARN and Cell Token were securities. The SEC has given their opinion. The FTC have given their opinion. The CFTC have given their opinion. And during the Maszynski criminal case, the defense is that Maszynski is saying it's not a security and therefore he didn't commit securities fraud. So those cases will have an impact because if it is a security or isn't a security, there are actually clear types of guidance for using, constructing a security versus whether it's a currency. And so that's going to lay its impact as well. And the timing, whether the deposit was the taxable event or whether it's the return of crypto in kind in the same currency or whether it's a different currency. This is complex. This is the most complex transaction many of the tax advisors I've spoken to have ever seen. And so there you will be essentially, in the situation where we're all in this together. Right. When you withdraw crypto, essentially when you get distribution 1 from Celsius, depending on how you treat that, whether there's a loan against it, whether it's collateral, whether it's a security or a currency, that is going to slightly change the treatment based upon it's all about beneficial interest. So if you exchange beneficial interest and Celsius own it, but then it's returned to you and you own it, these are all various different analysis that's going to need to happen. This is why we're going to have to work together as a community, pulled together in various jurisdictions to understand how you go through the clean the past exercise. Then you're going to receive receipt of shares and dividends. How are those going to be treated? You may not receive dividends from your shares. It's probably a growth play. But if you receive those shares versus when you sell those shares, those valuations are going to need to be recorded in your cleaning exercise and known and understood in order to realize whether you have a capital gain or capital loss and the impact of that, because whether it's a security or not a security will also determine. I am really sorry that I have to make it this complicated. I really tried to get a more simplification, but I failed miserably because it's unprecedented. Then there is the receipt of litigation proceeds, how those will be treated, whether based upon your jurisdiction as well. And then there is any transfer of a claim. So I will be, for example, potentially transferring my claim to one of my portfolio builder structures, which allows me to have an asset protection structure and the compounding of interest under a tax deferral. And then you pay income through a dividend, which is more efficient than doing it through income. This is why, unfortunately, many of the most different structures, they tend to be required. And what we're trying to attempt to do here is, as a community, maybe pull together different opinions in different jurisdictions so that we can have a more efficient approach here. And then you've got against the time of when people are going to be distributing and various other things. Okay, so let's look at, firstly, this is pulled from my interpretation and various other tax advisors I spoke to from the disclosure statement in the tax section. There's about 16 pages, and I've read all 913 pages. There's 3 different versions of the disclosure statement, 4 different versions of the disclosure statement. I read them as they came out, read the changes, and then read the final one from start to finish. It is a very comprehensive document. But let's have a look at some of the US tax treatment as well. So firstly, 10 different points. So Celsius, as an organization, is going to be making the assumption based upon the current information and a bunch of disclosures and things that could be wrong or could be right, that there is no taxable event upon deposit. So that's an assumption that they're going to be making. When we deposited to Celsius, it was not a taxable event. I know that in the UK, under current law, that may not be the case, but they're looking to change it next year in April based upon some lobbying effort and what HMRC wants to do. So just an FYI, what is in every jurisdiction is going to be slightly different, but you can make some assumptions and share that with your advisor. Then what are they also assuming? So Celsius is assuming that the borrow and the earn program were essentially, sorry, let me grab some water. Just while I'm grabbing some water, do me a favor. If you're watching this on YouTube and you like this content and you think it's useful, help me with the YouTube algorithm, hit the like button and share some comments underneath this as well. And if you're not a subscriber, subscribe to the channel so that you get the notifications and hit the bell symbol and all. Just take a quick water break and then I'll go through the other points. Okay, so point number 2, Celsius, in the case of the US, is making the assumption that the borrow and earn were essentially called tax ownership transfers, which means that you didn't create a taxable event, but you relinquished ownership and lent the funds to Celsius. And therefore, what they did in the middle is their business, and you will be receiving it back. And they give a bunch of disclaimers as well, but that may not be the case as well. Now, let me make sure I get the language here. There's going to be a distribution of the claim that may be taxable. One of the opinions that they get is that if you receive it back in the same currency, which everything's being converted into Bitcoin and ETH, so the Bitcoin and ETH conversion, because we gave ownership, is going to be Celsius is the company's tax gain or loss. But from our side, if we receive some Bitcoin back, one of the assumptions that they make is that that is not a taxable event, but the switching to another crypto may be a taxable event. And then there is also some assumptions where if it is in a similar form, that may not cause an event as well. You're going to have to make some assumptions there. and follow that as well. But whether you use the petition date or the effective date for that basis is unknown and unprecedented. And so you're going to have to make an assumption there and share that with your tax advisor. Then there is the whole, let's have a look. So the portion that you get paid in kind, depending on the final numbers. So if I were looking at the disclosure statement, I'd say that Celsius has disclosed that under a NewCo reorganization, under the Fahrenheit sponsorship, that 37.5% of it is crypto in kind. And so what they've done is they've dollarized the value on the 31st of May. They may change that when we get the actual distribution. And then that percentage probably makes up the percentage of the same crypto that you could say is attributable to that claim. So if you restore some Bitcoin back, then you could say 37.5% of it is attributable to that type of treatment. And so you could assume that may be the tax-free treatment. Then if you decide that here's what exactly will be happening, Celsius, the company, will then be selling some of those assets, those crypto assets, and investing them in NewCo shares. So that doesn't affect you, that affects Celsius. That will realize some kind of gain or loss based upon selling those assets. And then Celsius is going to have to pay the tax based upon their assumptions on the intercompany loan, the cross-border UK to US transaction, and various other assumptions that they're going to need to make, which will affect the amount of recovery funds that we have. And so they've cornered out, I think, about 100 million of administrative costs. And part of that is going to be based upon what happens at the Celsius level. But they're going to essentially, Celsius, which will be a company that won't exist into the future, will be selling some of those assets, and they'll be getting shares in NewCo in return. And then Celsius will be settling part of those claims with the shares. And that's how we get those shares. And so that will be in the current disclosure statement attributable about 29.5% of our claim. And so you have to prorata the amount attributable to the crypto in kind that may be a tax-free distribution, depending on how you receive it and the assumptions that you make. And then the shares will be a prorata distribution that they are assuming is a taxable event for the creditor based upon their jurisdiction and settling that claim. Then finally, Celsius will then go and pay its tax, will reduce the amount of assets that we have to distribute, or it may have a tax loss, and then that will be treated in a certain way based upon the unwind of the company. And so the tax authorities may owe money to Celsius, or Celsius may owe money to the tax authorities based upon that. And that will be, another USD claim that will affect the amount of crypto distribution we have at the end. So you can see how this is an entrenched mess. Then what do we have? The receipt of the equity, as I said, is likely going to be treated as a taxable event. And so the crypto equity that you receive versus the NewCo valuation will be important points. And then if it goes public and the share price crashes, unfortunately, then you have a higher base. Or if you bought your crypto at a higher base and NewCo equity is valued there, then you may have less of a loss or more of a gain. And then if you don't have the funds ready, you may have to sell some of those funds in order to pay the tax, which then has a knock-on effect. So it's why valuation becomes important, and ensuring that we have a company that has shareholder buy-in in terms of the vision, so that we can do what we can to prevent some of those effects. Obviously, market factors come into that as well, and timing factors. There's an element of gambling, and there's an element of things that we can control. Okay. And so NewCo valuation will be adjusted for the percentage of the claim attributed to equity which will then be adjusted based upon your base rate of crypto, how you receive it, and the valuation of NewCo. I am really sorry, but I'm just giving you the truth so that you can be prepared. And then we'll also be working on some software to make this a little bit easier, hopefully, for creditors based upon most of us being in the same situation, but different treatments depending on your jurisdiction. Okay. And then you've got the litigation proceeds. They will most likely be dollars. I don't know yet. We don't have the full details, but they will be most likely treated upon income if you receive them as an individual. But if you have them in a retirement plan, that may be tax deferred income. Whether you have it in a company, you could receive that income, and then it can be, you know, profits and losses and dividend distributions. And so this is where those that have larger claims may end up deciding for future distributions to transfer those claims to some more efficient structure, which is something many of our clients will be exploring. And then number 10, you have the repayment of the loan. So if you took out a loan and borrowed against your crypto, then you've got these horrible language, which I can't remember the language, it never rolls off the tongue, but you have the opportunity as somebody that has an outstanding loan to repay that loan. And if you repay that loan, then Celsius will give you some Bitcoin and some ETH, which you can decide on the election depending on the size of your loan. And that will be, Celsius assumes that that is a tax-free distribution. Repaying the loan, it pardons the loan and it reduces the amount of the taxable side. And for that reason, I expect many of those in the loan group to be toggling to receive more crypto because of the tax treatment. And therefore you end up with trying to understand the game, which I'll share in the final slides, of the litigation and how that actually impacts. Right. And so, you know, as I said, the devil's always in the detail, but I want to get you everything you need to know so that you can start to plan and figure out what you're going to be doing. Okay. Now on the non-US side, this is really, abandoned within the plan, but it says a bunch of stuff. So firstly, if you start receiving dividends and stuff in shares, you're going to have to work with a broker that gives you, for example, a W-8 form so that you can make those declarations. And if it's a company, for example, it might be a W-8 E form, so that you're not subject to withholding tax, where America essentially holds 30% of your distribution through withholding. And then you have to claim it back from America if you don't provide certain forms. Because of FATCA compliance and CRS and various other geeky things that, someone that spends their time on these types of matters. So, the financial institution you use matters because they need to make sure those forms go through as a non-US person. Okay, so let's look at some of the points that I think for non-US. I don't want to pile on too much more information. But I just want to give you what you need so that you can understand and you can start planning it. From the non-US tax advisors and the people that I've been working with in order to develop some software and integration between Bank to the Future and tax software, you essentially held an IOU asset on Celsius. And an IOU asset is all about the legalities of the transfer of beneficial interest. And your tax advisor is going to have to maybe work with a legal tax advisor. And so this is why it's important probably to pull together groups of people in different countries that are following similar strategies, so that you can get the kind of advice from a high net worth, but for a bunch of people in the same situation. So you hold an IOU asset on Celsius, and beneficial interest is actually not even been resolved, because if it's not a security or a cryptocurrency, there's precedent in the cryptocurrency case versus the securities case as well. There's something, for example, in the UK called a negligible value claim, whereby you could say that depending on the treatment, you could write off your claim as negligible value because you essentially didn't receive the money back from Celsius, and then you treat the offsetting distributions as either a gain or loss, depending on your cost base. And that is a tax opinion that some large companies that we've been working with may sign off on or may agree to, and it adds some additional clarity. But again, it depends upon your jurisdiction and the essence of where and how you ended up with these funds, whether it was in a retirement plan, whether it was in a company, or whether it was you or an individual as well. Again, sorry for the complexity. I don't want to sugarcoat this anymore. I just want to give you the reality so that everybody can move forward and plan their recovery. Okay. What else have we got here? I don't think until you know what you're doing, you should rush to withdraw your funds. Because once withdrawals are open, we have this 90-day window. You might want to use that 90-day window to take you into the next tax year or stay in this tax year, or make some setups and then determine pricing, because that day maybe become relevant. An element of gambling and then an element of skill. And so, you know, once you know this, you can make the right decisions in the cleanup exercise, so that you can determine when you want to withdraw it and where you want to receive it to, based upon the treatment as well. Whether you go into a US distribution partner, that may have withholding tax. Whether you go into a non-US distribution partner, whether you can convert that to staking, whether you can convert that to dollars, whether you do that as a round trip to try and get it back to Bitcoin, all of these different transactions will have an impact, and you need to plan for that as well. And then you've got the actions prior to January, or if you're in a certain country that uses April, whether the equity gets distributed before then or after then, whether you receive it in your brokerage account before then or after then, whether you decide to sell it and how you sell it, what you sell it for. All of these are going to become important. And it's why if you're going to be involved and engaged in this industry into the future, you're going to probably want to use this opportunity as a one-time cleanup exercise and then plan for the future of exactly how you want to receive your income and your recovery, so that you've got it set up in the way to plan to really rebuild your wealth and develop a strategy. And I personally believe that by 2025, this will all be clear. There'll be legislation, there'll be test cases, and what you don't want to be is left on your own as the one person that gets investigated because you've got maybe a higher net worth account, they single you out, and then everyone else just sits back and adjusts accordingly to that. And so that's kind of the situation that you want to try and avoid. And, you know, we as a community moving forward want to, I believe that that's an assumption that one can make, that this will become precedent and clear based upon the regulations, the tax authorities, the classification of these different transactions, and any changes that are being happening at the lobbyist level with various groups in various different countries. And so again, I am very sorry, but if you like what I'm sharing, at least you may not like it, but at least the truth will set you free so you can make a more empowered decision, and you've got a community of people around you to go through these decisions with together. And so that brings me to the final point. You can see why I wanted to do these 3 points in one video, because the timing determines the tax, and then the tax needs to be prepared for, because you may receive income into the future as a result of your recovery strategy that you defined from video 1. Do that before you do the voting in video 3 that we'll be covering next week. Okay, so what's my litigation strategy? I'm still doing a bit more work with my legal counsel, but at the current thinking, we're doing this in real time, is that I will be certainly not opting out of the class claim. Now, I personally am a controller of 5 different claims. through other shareholders, we had the Series A equity, which was written off because I'm assuming equity's worth zero for those different segregated portfolios and SPVs that were set up for holding those shares based upon investing in Celsius in 2020 before much of the fraud happened. I also have a company which our board will be deciding, and that will be funds in Celsius through an LLC based upon our company's balance sheet. And they will need to treat that in a certain different way. The biggest claim is my personal claim in my personal name, which 100% belongs to me. And then we had some of our retirement plan accounts that in beta, we had some of them that had invested in or opened a Celsius account, and they have obviously the correct protection and deferral structure. And so all of those, whether you want to, all of those under the 5 accounts that I'm involved with, particularly my personal account that I have full authority and decision making over, I will be opting into the class claim. But I may, and I'll give you more, keep the litigation of my own individual claim, because there may be certain recourse that I have based upon things that Maszynski did that were unique to me, or Celsius did that were unique to me. And so the class claim is about all the things that impacted all creditors, not legal advice, not financial advice. And I have zero interest in pursuing my own litigation. So I'll be going for the 105% based upon my current strategy. But I may be keeping the individual claim just due to the unique circumstances as me as an individual, but the company and the various other things, they don't have unique individual fraud or something that they may be pursuing. And so they might want to contribute their claim to the litigation trust. The difference is if you have a very unique individual claim and you have the budget to pursue it, you may want to hold on to that, but you will need a big budget to pursue it. However, if you don't think you have a unique situation and you don't have the budget to pursue it, you may be much better off contributing your claim to the litigation trust, but you'll be sharing all those benefits with everybody. So those are the 2 things to consider. And that's my existing understanding. But before I vote on the different 14 things and items within that, I'll be defining my strategy first. And then you can, without having legal advice, you can consult your legal advisor, your financial advisor, and your tax advisor around how you want to treat it based upon your circumstance. And that's the final bit of content before we move over to the game that I want you to understand. The reason that I'm not voting now is because there's still several parts of the game that I want everybody to understand and that will play out over the next few weeks. So here are the final games in the final moments, and why we still have a bit more work, but we are getting closer and closer to the finish line. The first thing is just understand the dynamics between earn and loans at this point. Essentially, because of the earn and loan settlement and the tax treatment of loans, you will expect that the vast majority of those in the loans group for tax reasons will toggle all the way to crypto. Now, some people might be toggling all the way to equity. I'll be splitting my existing thinking between a growth strategy and an income strategy, but how I toggle is going to be based upon what I see in the supplemental documents next, because we're still being asked to write essentially a blank check without knowing the management agreement, who the board are, and all those types of things. And so I'll be determining that based upon what comes next. And so here's the game you need to understand that was set up with us. And remember, originally, Kirkland wanted to play Celsius against Earn, saying get the money as fast as possible. Celsius against Earn, Custody against Earn. And so Custody won that case so they could get payment in kind and the favorable tax treatment. Earn got left behind, but also loans now want their favorable tax treatment. And so they're going to probably toggle to all crypto. And so they want as many Earn people. It's in the interest of loan to toggle towards equity, more equity, because most of that is going to be filled up on the loan side. There's about 400 million of loans against 800 million of collateral. And I'm assuming a big chunk of those are going to want to get the more favorable tax treatment. And some of those, based upon the quality of the equity, are going to be toggling to more equity. But just understand the game. The loans group want earn to toggle as much to equity for their tax treatment. Once you understand that, you can understand what's happening next. And in the confirmation hearing, they may also want to negotiate some refinancing agreements to make that more favorable, but we will see all of that over the coming weeks. And so the earn ad hoc and the loan ad hoc still have an important role to play in determining the final outcome and where that goes. Now, remember, to me, how I think, this is my brain, I'm trying to get my Bitcoin back and I want a growth play and an income play. And how I toggle that balance is going to be, for me, based upon the strength of who I'm investing in. And so maybe during this broadcast, it's been announced who the board is. I don't know. Maybe midnight tonight, we're going to understand that. But the supplemental document should be announced today. And then we'll know the strength of who we're investing into. And that will determine over the next week whether I'm going to be toggling on or in which direction, and what I want that to end up as. But I'm more of a, at this stage, looking for a diversified play. And so for me, that is based upon the management agreements and what we don't know yet. That's not in the disclosure statement until the end of today. And if you look at the Voyager case, it actually changed several times throughout it. And so just because the supplement comes today, it doesn't mean that it's not going to be adjusted based upon some lobbying efforts that may happen with the earn ad hoc, the loan ad hoc, and anything that comes next throughout the confirmation hearing. And I'm not sure exactly how that, how that relates to the finality versus adjustments leading up to final distribution and confirmation order. But we need to understand that, and we'll be continuing to go through that together. And then final part to understand is that the way that I'm thinking about this, that my brain is that even if we're forced into a plan based upon information we don't like, so let's say Celsius gets a bunch of reluctant yeses, because this game has been set up for us to all vote yes to the plan, and that is how I'll be voting, because that's the way the game has been set up. But also understand that it's best for loans if more people toggle and believe in the equity. So the strength of the equity is still important, and there are still things there because the loans get their favorable tax treatment if more of earn toggle. And if it, if it favors all of that, I don't expect there to be much left over. I think it will all go to loans that want to do that. Then this is really, after that, determining whether people sell or not. And whether people sell or not will have an impact on what happens from our tax. Because if there's a lot of sell pressure when the company goes public versus a lot of buy pressure, that impacts the tax strategy, the timing, the litigation strategy, and everything that comes from there. There's an element of gambling and there's an element of skill. And I just wanted to make sure that everyone understands the final games from here. As a strategic thinker, I want you, hopefully, if you're watching this video series and you're bothering to watch it this far, then hopefully you understand how my mind works and how I'm thinking about how to maximize recovery. And hopefully everyone can get dragged along into how that goes and what comes next. And so the redistribution, the problem is that if we end up with, for tax reasons, loads of retail needing to sell, then to me, that trades us at a discount because the stock has the mining assets, the staking assets, and the illiquid assets. And to me, that's an unfair distribution from retail to institutional that will be able to suck up that demand based upon trading at discount if a bunch of people have to sell for tax reasons. And so that's why, for tax reasons, you may end up with a retail to institutional redistribution based upon what happens with price action and based upon timing and tax strategies. And so to me, a reluctant yes is also a loss because it creates sell pressure if we're thinking long term. And so therefore, there's still work to be done to ensure that we get the best outcome and the best equity, and we get those that want to toggle so that loans can get that favorable tax treatment, and we can get the best outcome for all creditors based upon the shit sandwich that we were all given in this situation that we're going to now try and turn into something to make up for some of those losses, depending on your treatment. Okay, right. So that's everything I've got for this video, but I do want to give a summary before I move over to the AMA. In video 1, I covered my strategy for how I'm thinking about recovery. The devil always comes in the detail, which is why when you start execution, the legal advisors, the tax advisors, the financial advisors come in. But let me just give the strategy summary as a recap. I will be setting my Bitcoin recovery goal and ignoring the dollar percentages. I will just say, here's how much Bitcoin I got back. Then I'll be converting that into ETH staking. So I'm ensuring that I'm having a distribution partner where I receive my Bitcoin or my ETH, where there's some control over that process. And hopefully I can get it all into ETH and the ability to stake it and move that into whatever structure I want to go into as well. Then I'll be looking to maximize the sunk investment by voting yes for the plan and receiving some equity and having a growth play as well. Because the 350 million that we use to clean up this company is a sunk cost, and the amount of money that was invested in the mining operation, if we can't maximize it and try to get a multiple based upon favorable stock markets and ETF markets and Bitcoin halving cycle, then I'll be playing that one as well, so that I don't maximize the sunk cost because of the situation we're in. So then I'll have an income play, which is ETH staking, and a growth play, which is NewCo equity. And I'll make sure that I put that into a favorable structure so that I can defer the tax on my income and I can realize the gain in the most favorable way, not based upon realizing a loss or a gain before the event and thinking about my recovery into the future. And then I'll be converting all of my litigation proceeds. So when I receive them as dollars, I want to be able to easily take those dollars, convert them into ETH, and stake those ETH and be able to compound it where all of the ETH that comes in can be reinvested and recompounded until eventually I either completely miss my goal because Ethereum has failed relative to Bitcoin, or the equity has significantly underperformed Bitcoin. But if they overperform in both the growth play and the income play, then I will rebalance my portfolio, as it were, back to Bitcoin, once my goal is actually met. And I may never meet my goal because at the end of the day, this is a high risk, high return strategy versus just locking in the loss now and getting into Bitcoin or stable coins, depending on your preference and your appetite for risk and your stage of your life cycle, whether you're retiring now, whether you need to spend those funds now, or whether you can defer your gratitude into the future. Defer your investments into the future. Okay, so then in part 2, I covered that timing, tax, and litigation is important. And so as a summary of what I covered in this video, everything is immensely complex. There's going to be precedents. And so there's going to be assumptions that can be made. And we could benefit from software that helps us determine these determinations. And also pooling together in terms of getting the professional advice that maybe only a high net worth could afford and try and pull that. And at Bank to the Future, we're going to be supporting international creditors that want to share that journey. And I'll be sharing what I'm doing as I'm doing it, not for advice, not giving advice, but whether you want to share that journey as well. So automate, essentially authorities will most likely have this data. I expect tax authorities to ask for this data. So therefore, you're going to have to, I think tax authorities will forgive the uncertainty of this industry, but it's a good time to clean your past, determine how you're going to treat these things and get all that clean. And then prepare for the future so that you've got a clean future going into 2024 and going into 2025, where more of this regulatory becomes clarity. And don't give up on the industry, because opting out of traditional finance is still, I believe, an essential and responsible way of managing your risk, given all of the different things ahead. Okay, so I'm not going to be going live until next week, Friday. And at that time, we should have had the supplement, maybe the planned supplements released today, and we should have had a good time to analyze all of the different things that's going to be the final details we need to determine the quality of the equity and the quality of the litigation, so that I can decide how I'm going to toggle on September the 15th, 2025. And so I'll go live next Friday. And hopefully we would have seen more, spaces and solicitations. We had one from Fahrenheit, one from the UCC, and then a video from Celsius on the ballot, and a video from the UCC on the ballot as well. Hopefully we get more of that, that helps us decide what we think the quality of the equity is. And in video 3, this time next week, I'll be going through my Chapter 11 voting strategy. So I'll go through each of the 14 points, and based upon each, how I'm executing my strategy, how I'll be voting, so that you can decide how you want to do it in part 3. And then on the 22nd of November will be the actual deadline, and we will have full time to analyze all of the information. Maybe there'll be some different works from the different ad hocs, and maybe there'll be amendments to planned supplements or disclosure statements. I'm not sure how that's going to go, but that goes on to the 22nd of September. And then I'll release video 4. And in video 4, I'll share with you the types of accounts that I'll be using, the solution that I asked Bank to the Future to deliver for me in order to be able to execute this and switch between staking, private equity, and software that allows me to assume all these different events that we need to know, and how I'll be executing this strategy. I'll be going through that in video 4. Again, all for educational purposes. If you would like to be notified about that and all of the spaces, then you just need to head over to simondixon.com/recovery, enter your details. And next week, we'll be releasing the membership portal. And in the membership portal, you'll be able to ask questions under these different videos with other community members that can share some of the things that they're doing, and some of the different things that are coming up. And that brings me to the close of this video part 2. And I'm now going to head over to Twitter Spaces to answer, or X Spaces, I guess we call that now, to answer some of your questions. So just before I do that, let me show my face. It's gone from sunny to dark in the time that we've been doing this. And so I hope this is useful. I think it's more useful than burying your head in the sand to know this, but I think the truth will set you free. Then you can plan better, and you can make better decisions into the future and really plan how you're going to rebuild your wealth as we go through the recovery ahead. So always remember, although this is complex and things are changing in real time, you are alive at one of the most interesting and exciting times in financial history. Some are going to get wrecked, others are going to do really well. And hopefully this whole experience that was awful for you puts you on the right side of that change, because of the community we built from here and the actions that we take from here in building and protecting your wealth. Okay, so as always, we're doing it with peace, love, unity. I'm going to close this YouTube video and I'm going to head over to Twitter Spaces. Azad will be recording that. They'll, if you're on the Twitter space right now, put your hand up if you've got a question, and then we'll go through those questions. And let's try and keep it on topic to everything we covered in video 1 and 2. Okay, I'll see you on the other side on X Spaces. Peace.